Welcome to Markets Now. I'm Michelle Rook along with DuWayne Bosse with Bolt Marketing on a down day in all but soybeans and kind of a risk-off day again on Monday, wasn't it?
Yeah, it sure was. Been an ugly market for a couple weeks here in the grains, and funds are selling the markets, as we all know now, and they continue to sell a little bit in the corn market today. Probably just, Michelle, honestly, a lack of bullish news in that corn market to make it rally.
So how concerned are you about this corn market? We took out key support areas last week and the funds really piled on and
Mhm.
now are short in this market. Do they keep pushing that side of the market, do you think, as we go forward?
I'm afraid they might. And yes, I'm very concerned with the corn market because I've been the guy who's been bullish for such a long time, waiting for a weather scare to spike us up, tight old crop stock situation. Well, that's not exactly the case right now. So I am nervous about it. But I also wonder, Michelle, aren't we pricing in a whole lot of bearish news right now? I mean, we got the trade talking about lower export demand by maybe 100 million bushels in upcoming USDA reports. And we're already talking about moving the yield above trend line. So I feel like we're pricing in a lot of bearish news right now. So maybe the downside is limited from here price wise moving forward.
Yeah, I know we've kind of gotten lulled into that old crop tightness, though, being the story, and now we're kind of transitioning over. So that's a little bit hard to
Yeah.
get your mind wrapped around. The other problem with corn has really been this wheat market, more new contract lows here today.
Mhm.
And how much lower do you think we're going to go in that market? And was it all just about weather?
I think weather had something to do with it for sure. We got more rains coming towards the southern plains, and importantly, it's going to hit the areas that missed the rains the previous week. So that is bearish for the Kansas City wheat market. But boy, are we just thumping this thing down. As far as where is support, I don't know anymore. We've broken most of the support lines I was watching in the charts. So now it's just kind of a falling knife, and I'm not going to step in and buy it to try to catch that falling knife. And evidently, no one else is either because it keeps falling.
Yeah, we really don't have any war or weather premium at all in this market right now. It doesn't feel like, anyways, Dwayne.
No, you're right. And I'm glad you brought that up. I mean, Russia seems to be back into a corner here. And I kind of wonder if Putin isn't going to do something a little drastic this month with the Black Sea export corridor or bomb a port or who knows what he could do. But we're not taking his threats serious right now. And I got a feeling that's going to upset him. So, with these funds massively short the wheat market, if something does happen in Ukraine, we could have a pretty wild back upswing in this market.
I also wondered if the news that the EU had struck a deal with Ukraine to at least move grain through those bordering countries was another bit of negative news for that market today.
I think it is too. You're right. They reached a bit of an agreement. Poland, some of the Eastern European countries, don't want to get dumped on by Ukraine supplies. But, out of the greater good for the world, I guess Europe's kind of suggesting we push it through, get it out to different ports at the very least to get this wheat from Ukraine out to the world markets. But, it's still working for now. But like I said, this war isn't over yet. And we have to keep that in mind.
Soybeans able to shake off the lower day and the wheat and the corn market kind of trade on its own. And do you think that's just because we technically held support areas we needed to last week, or is the fundamental picture just a little bit more bullish there?
I think a little bit of both. We did hold the lows last Friday, which was good, gave for support for today's trade. And then really the way the soybean market traded in the close, I got a feeling if it wasn't for corn and wheat being so sharply lower, I think beans could have had one heck of a good day here. But so the charts look good, but also the fundamentals are more bullish when it comes to the soybean market. We're not getting the big export cancellations. And in fact, they're still decent. And remember, our old crop situation for soybeans is still very tight. We dropped hard enough in our price. We're about $60 per ton above Brazil. To me, I think that's right where we need to be because remember, with those old crop stocks so tight, if we drop down to the same price as Brazil and China starts buying from us again, we theoretically could run out of beans here. So if Brazil's market bottoms here in the cash side, which it should now as harvest gets done, I think our soybean market can bottom as well.
Yeah. Plus, if you look at weather being a little bit more bearish or more favorable, anyways, for more
Yeah.
soybean or more spring wheat and corn being planted, that means maybe a few less acres of soybeans. Is that kind of the school of thought?
It sure is for me. I mean, take 1 or 2 million acres off the new crop soybean balance sheet, and it's a crazy tight situation where even with trend line yields. So yeah, I do think that's something. And Michelle, all winter long, I was talking about, I think the total principal crop acres are too high. So yeah, if we have really good weather, farmers always tend to plant a little bit more corn, and then beans will get hurt on that situation. Might not be a story until June 30th when USDA announces the actual planted acres, but that's in the back of my mind for sure. The soybeans could get shorted here this spring.
Yeah. Livestock, a lower day there in both cattle and hogs. And we talked about
Mm-hmm.
risk off the top here. And when you've got the Fed meeting this week and maybe another possible interest rate hike, yet another bank that failed, was that part of the sell off today in the livestock, or was there more to it?
I think that was a big part of it. I mean, you just rattled off a lot of bearish news that kind of happened on a bad Monday morning for the livestock markets here. Held in okay, but I am a little bit concerned with this upfront contracts here. June's now the lead month, and of course, everyone's going to say, "Well, it's at such a discount to cash; it needs to rally." Trade is very
Right.
rarely that simple and easy. Actually, I'm just a little bit worried the cash market might have topped a couple weeks ago, and box beef should top in the next week or two. So maybe the Packers can actually inch that cash market down a little bit. June can't fall too far with that huge discount to the cash, but it doesn't have to be up at the cash levels right now either. It's a long ways away from delivery.
Absolutely. The one thing I will say, though, you've got the funds that are still really long this market, and it looks like maybe they're so far at least defending that position.
Yeah, and they probably should. And why wouldn't they? I'm talking a little bearish here, but it's very short term. We have a supply problem in cattle, and it's for once to the good side of things where our supply is very tight, and we should see higher prices moving forward. Now, I look for more just a pullback correction in the live cattle market, and then we could still have another uptrend. Maybe cash and the June contract meet at, say, 170 later on. That's still a very bullish market.
Yeah, sometimes you have healthy corrections, though, in otherwise bigger bull markets. What about the hogs?
Mhm.
We had a higher week last week by over $5.50 in the June. We had a lot of other things that looked, like maybe we were turning the corner on cash and cutout values, but today down. Was that just profit taking, or was this China PMI news part of it, or what do you think
Yeah.
weighed on the market?
I think that China PMI numbers didn't help this morning. Their manufacturing numbers came in lower than the trade anticipated, and the hog market always watches that very closely. The funny thing is, it didn't hurt the soybean market today, though. But hogs, we rallied sharply last week. People started to talk about a bottom, and it's just again like the trade decided, yeah, it's not that easy. We're going to correct back a little bit. Probably some still unwinding the cattle hog spreads as well. And our pork production is still pretty high now. Slaughter was down a little bit last week, maybe the sign of things to come. I mean, I will say I do think the hog market has bottomed. How high we can rally into the summer months, I'm really scratching my head there, Michelle. But at least I can confidently say that the lows are probably in.
Yeah, well, DuWayne, with the big premium that the futures are holding to the cash, you got to get the cash to catch up first, I would think.
Right, and cutouts and cash have really been dragging their
Right.
feet, haven't they? But watch for them to start to inch higher. I think this futures market caught
Okay.
wind of that last week. That's why it rallied first.
All right. Thanks for your time as always, DuWayne Busse with Bolt Marketing, and that is Markets Now.